Okay, so we have the euro, US dollar. All right. I will show you how to walk through these tools here on the next course. And I'll show you what this platform is. Well, you guys will get to be familiar with it. So the euro right here, as you can see, right, that is the base quote. Okay, the base quote. And then the US dollar, I'm going to go ahead and color that a different color. Color that yellow. Is the currency quote. So in other words, okay, way over here to the right, you see all these numbers. That is your currency quote. All right. All of this right here, when it comes to all these red and green, what we call candlesticks, okay, that is called your base quote. Let me make sure I'm saying that right. Pretty sure I am. There we go. Okay, yeah, I knew I was saying it backwards. This is your currency quote. I'm sorry, I'm gonna type it right here. This is your currency quote right here. Okay, and this is your base quote. Okay, so what does this all mean? What do you mean by currency quote? What do you mean by base quote? So basically what this means, right? We have the euro, right? We have the euro, okay, slash USD, okay, US dollar. What that means is that for 1 euro, whichever way this market moves, okay, 1 euro will equal whatever the US dollar base is. So if you look at the chart right now, it is for 1 euro, it is equal to 1.19213. I am looking at this price that moves up and down, right? So all of this is 1, right? Your currency quote is 1. That's just 1 euro. Wherever this at, this is 1. 1 euro will equal whatever this price is. Right now it's 19215, right? 19214. So as this is moving up and down, that's how much it is. So if I was to go to from UK, right, with 1 euro dollar back to the United States and exchange my $1 euro to a US dollar, I should get $1.19. If that makes sense, if that makes sense, you guys type 1 in the chat if you guys understand that. Okay, I want to make sure you guys understand what I'm talking about. No matter how much or how high these candles move, this represents 1 euro. Okay, and there's other currency quotes too. GBP USD, that's the British pound against the US dollar. You have the Australian dollar against the New Zealand dollar. So it varies on which way you trade, right? So 1 euro will equal the US dollar base, right? And if I was to go back to to the UK, I would take my $1.19 and they should give me €1 because of the exchange rate. Okay. All right. So since you guys wrote one, I'm gonna say you guys are good. All right. So candlesticks. Okay. Candlesticks. Okay. Candlesticks. I want you to take a section of your notebook and write this down because this is going to be, I don't know why this happened. Uh, sorry, that's my admin. I have to make sure she's good. Okay. So on a blank piece of paper or in your notebook somewhere, I want you to take at least half a page or a full page doing this, okay? Because when we talk about candlesticks and candlestick formations, or when we say, hey, at the break of this candle, or when this market breaks through and closes above this wick, you need to understand what a candlestick is. So when you need to understand the lingo. All right. So on a piece of paper, which I want you to do on the left side, I want you to draw a nice tall rectangle. Okay. A nice tall rectangle, and inside of that rectangle, I want you to write the word bear. Okay. I want you to write the word bear. Now on the opposite side to the right side, I want you to do the same thing. Right? Equal height, equal length. I want you to do the same thing, kind of space it out a little bit, okay? And then inside of that candle, I want you to write the word bull. All right? I want you to write the word bull. All right? On the top and bottom of each of these two candles, I want you to draw a nice little thin line, you know, just a little bit, just enough so you can see it, maybe about an inch tall on your paper and on the bottom as well. And on the top, I want you to write the word wick. Okay, these are called wicks. You might also hear the word shadows. All right, it's the same thing. Is where price was within that time frame, and we'll talk about time frames later. All right. Okay. So write the word wick. Let me know if I'm moving a little too fast, guys. All right. Let me go to the chat. If I'm moving a little too fast, just type in, slow down. If you hear crickets, it's because I'm sat on my balcony with my feet propped up. Okay. So on top of, right, on top of your bear candle, I want you to draw a line. Okay. This line right here. And on that line, I want you to write the word open. Okay. Open. At the bottom, I want you to do the same thing and write the word close. Right? Write the word close. So the top, I want you to write open. At the bottom, I want you to write the word close. On the opposite side, on the bull candle, on the green candle, I want you to do the same thing. But this time on the bottom, I want you to write the word open. And at the top, I want you to write the word close. It's the opposite way, okay? All right. Now that you guys wrote this down, like I said, I know there's a few guys on here that I know that have done this training. So let's see if we can get some of the newer people to tell me, right, in the chat, why is it called a bear candle? Does anybody know why it's called a bear candle? Does anybody know why it's called a bull candle? Okay. You can take a guess in the chat. Right? If you guys don't know, just type IDK. I don't know. That's fine too. Everybody's learning here. It ain't no shame. If you don't know, you don't know. Because I'm gonna tell you anyways. All right. I just like a little bit of classroom participation. Okay. Yep. A bear strikes down. That is correct. A bear strikes down and a bull strikes up. Okay. All right. So draw those arrows. A bear strikes down. It moves down. And a bull moves up, strikes up. Okay. So I want you to take a look at this screen. Okay. I want you to take a look to that screen. Hold on a second. Let me type one message here. Okay, I don't see it. Okay. So take a quick look at this image. All right. Quick look at this image. And we're going to go to the chart. And I want you to remember a red candle, which we call a bear. So when we say bear candle, goes down, and a bull candle, which is green, goes up. All right. So let's go to the chart again. Since we went over this already, let's go ahead and clear this out. Okay. Now, let's just go anywhere. We'll go. Let me get an up down trend. Yeah, right here. This is fine. Okay. So then let me go ahead and function 11. All right. There we go. Beautiful. Okay. So as we said, a bear candle, right? A bear candle moves down, right? Bear candle moves down. Okay. So with that being said, that means that this candle opened here, right? And closed here, right? There's one candle, right? Open, close, right? Look at your notes. Open, close. Okay. So it moves down. So from here all the way down to here, this market, this market had a lot of bear candles. We call this a downtrend. Okay, I'll go over that in another section. Okay, we would say here, let that motorcycle go by. We would say here that this market is bearish. Okay, bearish means that the market went straight down. Okay, on the opposite end, over here, right? Right here on the opposite end is we have the same thing, but we have the market going up because we have green bull candles, right? Red brings us down. Red brings us down, goes down. Green goes up, down, up. If everybody gets that, drop a 1 in the chat. Okay, drop a 1 in the chat so I can know everybody understands how the market moves. And then we're going to start getting into time frames, so you guys understand time frames.
Hey, Jason, man, I'm trying to, I just got home trying to get something to eat, man. Hard for me to text, but I am definitely understanding what you're talking about.
Okay, no problem. And I'm recording this too, so no worries.
All right, bet. Thank you, sir.
Yep. That's right. Okay, so time frames. All right. If everybody understands how these moves, okay, I see everybody dropping 1, so I'm assuming everybody knows that a bear candle goes down and a bull candle goes up. All right, so now I need to incorporate what's called time frames. Okay, time frames. All right, time frames. What is a time frame? What are you talking about, Jason? Well, I don't get it. Well, if you look right here, right there, I'm just gonna do this. I'm gonna bring this all the way up. Do you see where I'm pointing where it says 4, the letter D, the 1H that is highlighted in blue, and then you have here that says 15M. That's your time frame there. In other words, let's do this. We're gonna start at the 15. Okay. And I like going to where the market is currently at. Okay. So basically what the time frames are, okay? The time frame, oh, let me get this out. The time frame, write this in your notes, represents how long the candlestick is. Let me see how to write. The time frame represents how long the candlestick is open until close. Okay. If you notice right here, there's a little timer, right? 0, 3, 35 seconds, 34 seconds, 33. When that gets all the way down to 0, okay, depending where this candle is at, right? When that gets to 0, this candle will close and will open a new candle, and then that will be going up and down for 15 minutes until that time frame closes. Okay? So in other words, right? If this is a bear candle, it opened at the top, right? Right now we have 2 minutes and 47 seconds before this candle to close, but it hasn't closed yet, right? It hasn't closed yet. So we wait until that timer closes, and once that happens, this candle is now done. It's over, it's recorded, and it stays there forever. And then a new candle will open where it closed. So if this closed here, the next candle will open right over here, and then it'll go up and down, wherever it's doing. If it's going down, it'll turn red, right? Because red is closed, right? This is the open right here. I want you guys to understand this too. This is the open, right? Right? If that's the open and this is going for up and down for 15 minutes, right? And I'm gonna explain how the wicks happen right now. Watch this. Pay close attention. And I'll go back to time frames. So if this candle opens right here, right? Right? Let's we got about a minute 20. Let's say this candle closed where it's at right now. Right here. That's closed. Boom. This candle starts, right? It'll start like this. It'll start like this quick, and then it may come down. As it's going down, right? Now it's got 15 minutes, right? The store is open. Store is open for 15 minutes. You got 15 minutes to shop, right? You come in here to buy, sell, right? Think about it as a pawn shop. People come in to buy stuff. People come in to sell their stuff, right? At value. So this pawn shop, right, is open for 15 minutes. Right now, it's in a bear move. It's selling, right? Now, let's say that this market comes all the way down here, stops, and then starts shooting up. Well, it's going to leave, right? Remember that wick that I was talking about? Remember that wick? Um, there we go. It's going to leave a wick. This wick, right? These wicks tells you where price was before the candle closed, right? Before the candle closed. So if this price came all the way down, then it came all the way back up. Now, what happens if it goes up? It's not going to be red anymore. It's going to be what? Green. Why? Because from the open, right? We open at the same spot. So if it's going up and it closes up here, then it's what? If it closed right here after 15 minutes, it's a bull candle, right? Remember, look at your candlestick chart, right? This will be closed, right? So look at exactly what I'm talking about right now. So this candle closed, a new timer started. Look how this candle went up. It was green, right? Look at the wick. It was just up here. Now it came down, leaving a wick. You guys see that? It's going up, and this is where there was the highest point that it went, right? So being that that was the highest point it went, it left a wick. It left like a trace mark. All right. If it
So the
went
wick
down,
is Jason. So the wick is basically a representation of the movement up or down within the 15-minute time frame that candlestick is open.
right, right. Basically where price was before the candlestick closed. So
Versus up or down, whether it's up or down.
whether it's up or down, right? You can get a wick at the top or you can get a wick at the bottom or both sides. Okay.
Gotcha.
Yep. So yep, exactly what he said. All right. One thing that I did leave out on my notes, I meant to keep changing it. The candlesticks, right, are called the body, right? So you have wicks, and then anything that's shaded in red or green is called the body. I forgot to put that on there. So go back to your candlestick notes picture, and just put an arrow to the candles and type and write their body. Okay. All right. So now, so this is 15 minutes. If I click here to the 1 hour, now this means that each candle represents 1 hour of information. Now I can put a vertical line right here, and I can go to the 15-minute time frame and see what happened inside this candle. Just like that. So here's the 15-minute, right? That hour started here. This is what happened within that 15 minutes. I can go even further, all the way down to the minute time frame, and I can see what happened, right? All the way to the 1 minute. So each candle is 1 minute. You can see here, 54 seconds. Each candle is 1 minute. All right. And you can go all the way to the day chart. That means each candle here now is a full 24 hours of information. Right. So at one point throughout the 24 hours, this candle was all the way up here and then come all the way back. So you can see at the bottom down here, okay, if you look at the bottom of my screen, right, you can see, right, you can see how as I move my cursor, it changes days, right? So this day here was today. Remember, the session closes at 5 p.m. Eastern time. So a new one starts at 5 p.m. Eastern time. That's why this right here is now saying September 2nd. Because remember, this is the Sydney session. Okay, when you look at these charts, we're not trading. The New York session is closed, right? So New York session is closed. So give me 1 second, guys, please. 1 second. I'm sorry. All right. Yeah, so each one represents a whole day, basically. So if you guys understand time frames and things like that, go ahead and drop a 2. Now, when people trade, when I trade on the 1 hour time frame. I love the 1 hour time frame. I sometimes drop down to the 15-minute, but I mostly trade on the 1 hour time frame, maybe the 4 hour, but most of the time, 90% of the time, I'm trading on the 1 hour. Okay, because the 1 hour I already know, I can get an idea of how the 15-minute time frame did inside that candle. And on the 4 hour, I can just add these 4 candles and kind of get an idea of how it looks. So I've already practiced to see how the market moves in the time frames, okay? Now, when you switch to the 1 hour time frame, your thing at the bottom here changes, right? It changes by the hour now. If you see there, 7-6 there, that changes by the hour, all right? So right now we're in the Sydney session. That means right now in Australia, it's Wednesday, not Tuesday. It's Wednesday. Okay. All right. So let's go back to our presentation. And I don't want to bombard with too much because I'm going to give you guys homework. Yep. You guys get homework assignments. How does the market move? Right? How does the market move? All right. Write this down. The market moves in 3 directions. Just 3. Not 4, 3. The market moves on an uptrend. Okay. The market moves on an uptrend. The market moves on a downtrend. Market moves on the downtrend. And then the market moves what we call in consolidation or sideways. Okay. Market moves uptrend. The market moves in 3 directions. Market moves on an uptrend. Market moves on a downtrend. And the market moves in consolidation. Okay. Market moves in consolidation. All right. If you guys wrote this down, okay, I'll come right back to it. Give you guys about 15 more seconds. Write this down. Then I'm going to go back to the chart because I'm going to show you. Actually, I think I have it on here. I think I have it on here. So I don't have to go to the chart. Okay. These are going to be the next 3 things we're going to talk about. And then we're going to end our session there. And I'm going to tell you what your homework is. All right. Definition of an uptrend. Okay. Definition of an uptrend. An uptrend, or what we also call the bull market, is when the market moves upwards, making higher highs and higher lows, right? Higher highs and higher lows. Well, hey, what does that look like, Jason? Oh, let's look at the chart over here, right? I did a little Picasso on here. So right now we start here at a low. And as the market moves up, it creates a high right here, right? Green candles, right? Look at the candles. Bull candles go up, strike up, right? Strike up. And then bear candles strike down, creating what? A higher low. Why is this a higher low? Because this low, right, is higher than this low. So it's called a higher low, right? Green candles, bull, go up, making a higher high, right? Higher than this high, and then making a higher low. This high, this low right here is higher than this low now, right? And then you go up and continue to make higher highs. So this is an uptrend. Low, high, higher low, higher high, higher low, higher high, and so on and so on. This will be a higher low. This will be now a higher high. That's when you know you are in an uptrend. Okay? That's when you know you are in an uptrend. All right? Now let's talk about what a downtrend is. It's totally the opposite. Okay? Downtrend is when the market moves downward, making lower lows and lower highs. Let me go to the chat here, make sure there are no questions there. So, same thing here. We start off with a high, then we got a low. Then we got a lower high, right? Lower than the previous high. You have a lower low. And that pattern continues just the same, giving you a downtrend. Okay, downtrend. The reason you need to understand these definitions of uptrend and downtrend is because there's going to be times where we will say, look at the previous high, look at the previous low, or the next higher high, the next lower low. Look at this downtrend. Look at the fourth lower low or whatever, right? So that's why you need to understand how the trend moves, okay? The next one here is consolidation. Now, consolidation is when the market moves in a sideways motion, failing, okay, failing to create higher highs and lower lows, right? It basically fails to make an uptrend or a downtrend, okay? The market is trapped between price, also known as market indecisiveness. Basically, the market don't know where it wants to go, all right? It's just sitting there in between two prices. You can see how the candles, right? The candles, the bull and bear candles, right, are just staying inside that box until, if you look to the very right, that green large candle moves up out of that box. We call that a breakout, right? You're going to hear that a lot. When the market breaks out and retest, right? You're going to hear that a lot too, that retest word. You're going to hear breakout and retest always used in the same sentence. When the market breaks out, it'll retest and continue to go up. Okay? So, how does this look on the chart? All right? I want to show you how to mark an uptrend and a downtrend, and then we're going to go to the chart, and I'm going to give you guys your homework assignments. Okay? When you mark an uptrend, you start from the bottom, just like that. You mark the lows. Okay? Low to the next lower high. Okay? Low to the next lower high. You draw a line. Okay? On a downtrend, right? It's also called support. We'll talk about that later. You don't have to know that right now. On a downtrend, you mark from the top down, not the bottom. I shouldn't see a line down here. I should see it at the top. So top down, right, from the highs. So here's a high, here's a lower high, okay? Let me mark it up in the chart so you guys can see it a lot better, all right? And then we'll talk about trend reversals, support and resistance on the next session, okay? So right now, right, just using this pair here, okay? We're still on Euro USD. The platform we're using is tradingview.com. So you can go to tradingview.com, create a free account, totally free. Just use your email address. You got an account, okay? When you get there, you just want to click on chart, right? It'll take you to the main page. It'll say chart. Click on chart, and it should take you here, all right? In order for you to type in a pair, you just click here, and you can type the pair, or you can backspace this and go here where it says Forex. Click on Forex and you can pick any of the pairs, right? I want you to use EURUSD for this homework assignment, okay? We're just gonna keep it right there, all right? you're gonna go to, once you get to here, right? We'll do a walkthrough on this a little later. All I want you to use is this tool. So from the cursor, the second position down, there's a little arrow here. I want you to click on that, and I want you to use what's called a trend line, okay? You want a trend line. And this is what I want you to do, okay? This is what I want you to do. I want you to identify a downtrend, right? So here's a downtrend, here's a high. What is this? This is a lower high, lower high. So we just go down like that, right? Remember, downtrend goes down. And I want you to also label it. There's gonna be a T right here that lets you type, okay? So click on the T, type right here, and I want you to write high, right? And I want you to mark your low. Where is your low? You follow it all the way down until you see that the market goes back up. When you see that U shape, find the lowest point, which is right here. I want you to type the word low, just like that. And then you do the same thing as just going up, find a high point where it starts pulling back, right? So this would be your high point. And we will call that what? What would we call that? A higher, I'm sorry, wait, we're going down. We call that a lower high. Okay, call that a lower high right there. I want you to continue to label that. Okay, continue to label everything at least 3 times, right? So this would be a lower low, or maybe 2 times. So I want to see a high, a low, lower high, lower low, and then one more lower high, just like that. Okay, just like that. Okay, and then I want you to type downtrend. I want you to identify what it is. Why do I want you to do this? Is because when you chart up, your brain is going to absorb what you're doing and is going to help you remember what a downtrend is. This is a downtrend. Okay. On the flip side, I also want you to do is do an uptrend. Remember, downtrend we measure from top down. Uptrend we measure from bottom up. Okay, just like that. And I want you to do the same thing, right? I want you to label it. So this would be a low right there, and it goes up to a high point, okay, to a high point. I'm trying to grab this. Right there, that's a high, right? The market goes up, makes a high, and then pulls back, making this well. What is that called before I type it? If that's a low, that's a high, and we're going to uptrend, that is what? A higher high. I'm sorry, higher low, right? Because there's a low point. So this right here would be a lower, higher low. And as the market continues to go up, this could be a higher high. This could be another higher low, but just spread it out a little bit, right? Just to have a cleaner chart. This will be a higher high, just like that. Okay. And then just label it uptrend. Just like that. Okay. Just like that. That's all you're using in this platform. You're just gonna use this line and the T. Right? Click here. You're gonna use the first line, the trend line. Right? You're gonna mark a downtrend. You're gonna mark an uptrend. Use the T to type your positions. And just click and hold it to move it around. Okay? Then, in order for you to send this to me, right? See that camera right there? right here. You can click that camera, type it, click that camera. Come on, camera. It's not, don't want to work with me. Come on. Well, when you click this image of the of this camera, okay, I can snapshot this. Oh, you know what? Wait a minute. Wait a minute. You can snapshot this, and it'll give you a link, and you just click copy and paste it. What I use is I use Snip and Sketch. Right? You just type Snip and Sketch here. Right? Should be on your computer. It'll pop up like this. Just click New, and then you can just mark what you want. Come right here to the copy, right? Go to your Telegram, go to Leave a Legacy, right click, paste, and send, right? That's how you do your homework, okay? That's how you would do your homework. I wonder why this is not working, but usually when you click this, it'll say copy link, and you just copy and you can paste it there too. So either way, which way works for you. Just try not to take a picture on your phone and send it, but if that's your only way, then that's fine. All right, so this is one homework assignment. The other assignment.
Hey, Jason.
Yeah.
Quick question. Would from 24, I'm looking at timeline at the bottom, from 24 to 28, would that be sideways consolidate from there to?
Yeah, I was actually gonna get to that. Yeah, probably about right here. Yeah, probably all of this would be consolidation. So from here, probably to about right there. That's all consolidation, meaning it's moving sideways, right? You guys see that?
Okay, thank you. I
Yeah.
just
So,
was making sure I was reading it correct.
yeah, no,
I was
perfect,
understanding.
beautiful. Nice kid. You're already catching it. So that was the other part of the homework assignment, was to find a consolidation area, okay? Basically, find the market going sideways, all right? How do you find a market going sideways? Well, if it's not going low or up, but it's going sideways, like right here, that's a small consolidation area. You can just box that up, just like that, and type consolidation, okay? This is an area of consolidation, right? So the area right here, you'll see them. They're small, okay? This is an area right here of consolidation. So that's what I want you guys to write as well, okay? So something like that. So I'm gonna go ahead and take another picture of this, all right? Take a picture of this. So that way you guys can see, okay? You guys can see what your homework assignment is. So I want to see downtrend, uptrend, and an area of consolidation, okay? That's one part. That's one part. The second part of your homework is I want you to actually draw out your candlestick, okay? Your candlestick. If you can do it on here, that's great. Enter B, enter A, enter R. Okay? You would do that. Give it to a nice 32. Right? Then you just use this trend line. Again, just go across. Right? Exactly what I told you guys to draw on your clipboard, right? This is open, or to draw on your notes, right? This is open. Okay, this is closed. All right. close. Then use another trend line again. Draw your wicks. All right, draw your wicks. There. Boom. Boom. And label it wick. Okay. And then do the same thing to the other side. I'm not going to do it, but just drawing an arrow, do the same to that side. Try to do it on here. Okay. That's your other homework assignment. Okay. Homework is due on Friday. Homework is due on Fridays. So for beginners course, guys, I'm gonna try to keep beginners course on Tuesdays, and I'm gonna keep for the intermediate ones on Thursdays. Okay. For right now, I haven't yet to put a solid schedule out, but for right now, we'll leave it like that. Okay. We're gonna double up the time. We're gonna double up the probably the Zooms, but I have other groups too that I have to make sure they get their Zoom times in. But for right now, this is all I want to see. I want you to study this, okay? And I'm gonna be throwing some YouTube videos in the group chat, and I'll type for beginners only, or I'll type for intermediate only, and um you will watch that, and I will tell you what homework assignment. I will type out what homework assignment I want to see from that. Or I will just say take notes. Okay, so um, we'll go from there. My goal is to get you guys out of the basics by the end of September and get you to start understanding strategies by October. Okay, we might move a little bit faster depending how everybody picks it up, but again, I'd rather spend my time getting you guys to understand all of this instead of rushing you into a situation where you're going to lose money. And that's not what we're here to do, okay? If you guys need the one-on-one sessions, just send me a message and say, hey, I need a one-on-one session, and I will send you, we'll collaborate a time, okay? We'll collab on a time, and we'll go from there. Even if it's just to review this or talk a little bit more in advance, you know what I'm saying? Everybody here has a different learning curve. So just want to make sure everybody has the opportunity to get their one-on-one session, okay? So if you need one-on-one session, just say, hey, Jay, I need a one-on-one session. Got a little bit confused on the downtrend, uptrend, or hey, I didn't get everything on that PowerPoint presentation, and we'll go from there, all right? All right, so is everybody um, feel pretty good, have a little bit understanding? How many here is their first full day of Forex? You can go ahead and give me a 7 in the chat if this is your first full day learning Forex.
This is Butch. This is my first full day. I'm a friend of Chris Joshua and Brother Paul.
All right.
Yeah, so they kind of put me on to this.
All right, man. Well, how did you like the session? Let me stop recording here.
Session was very good, very understandable. I followed everything that you talked about.